For quite some time now, market experts and economists have been claiming that the stock market is going to crash in the near future, and we might just be seeing the start of that right now. How's it going, guys? Ryan here, back today with another video, and today we're going to be talking about the stock market potentially crashing in 2020, the current drop of the Dow Jones, about 2,000 points over the past 3 days, and what is actually causing this. Is it due to the current economic situation? Is it due to the impacts of coronavirus and those sort of things? We're going to talk about that sort of stuff today. But before we really get into it, if you enjoy this video, please remember to give me a thumbs up. It helps out so much, and subscribe for more content. And if you've got any comments, questions, queries, or have any thoughts on what we're talking about today, please leave a comment down below and I'll interact with you. I'll have a chat, see what we can do. Now, there's quite a bit going on in the world at the moment, particularly with regards to the stock market and the China situation with coronavirus, and these two are sort of impacting each other and have a direct relationship. Not only have experts been claiming for quite some time now that the markets are overcooked and we're going to be looking at a crash in the near future, and a lot of them have been predicting 2020 or thereabouts. We've also now got the added issue of the coronavirus and the fear that that could have a significant impact on the economy due to China's influence around the globe and to the stock market directly. Now, if you don't know sort of the current situation, basically the stock market and the Dow Jones has been increasing for a relatively long period of time now, and due to the Federal Reserve injecting large amounts of liquidity into the market, this has resulted in a steady uptrend, and when you compare it to historical sort of numbers, quite quickly that the Dow Jones and the economy has been rising, and this is not necessarily the most sustainable thing, but as a result we've been in a bull market for a period of time now. Indices have been rising quite slowly and steadily as well over the past period of months, and as a result investors have effectively become a bit more relaxed when they're making decisions and when they're considering risk, and as a result this complacency can generally lead to a bit of panic when something bad actually does occur, particularly when a lot of economists and a lot of the media have been hyping up the fact that there's going to be a crash in the near future. And what we might be seeing now might be the start of that. And on the 24th of February, after months of speculation, the Dow Jones actually dropped to about 1,000 points over that night, and as a result everyone went into panic mode, the media went into panic mode, everyone was saying this is sort of the start of a big crash that's going to be occurring inevitably, and as a result you're seeing the Dow Jones, the stocks, everything drop quite significantly, whereas you see the gold price is actually going quite strong now because that's where everyone goes to safety, I suppose. It's a safe investment when it comes to poor economic situations, crashes, that sort of stuff. Then overnight on the 25th of February, there was a increase in the Dow Jones, a bit of a recovery of about 200 odd points, but then that was followed by another 800 point drop from the open to the close of day on the 25th of February. And this is mainly due to the fact that coronavirus itself has been hyped up and it's exploded outside of China, in the sense of there's a lot more cases, particularly in Europe, and spreading across the globe, although quite minimal at this stage. Just the increases particularly in South Korea and Italy, and the rate at which it's been contaminating people has resulted in people panicking as they think the global economy is likely to shut down. And in particular, when you're looking at China itself, there's about 80,000 cases of coronavirus at the moment, 78,000 at least of which are in China, and as a result they've shut down all their ports and those sort of things, and as a result there's not much material actually moving in and out of China, which is having quite a significant impact on the economy itself. And as a result, it's not helping the Dow Jones and it's not helping the stock market in general and the world economy. So as a result, due to the massive drop that occurred the day prior and the influence of the coronavirus hyped up to make investors feel a bit unsafe. People are starting to sell shares and panic and get out. And what you're seeing is effectively a large snowball effect of people trying to get out of the stock market all at once. A lot of people were predicting the next day that there might be a bit of a recovery, a bit of a bounce, just given the fact that the Dow did drop so significantly in such a short period of time compared to what we've been seeing in the past few months. And as a result, people were a bit more optimistic. But overnight, on the 26th of February, it dropped a further 120 points. And I'd mainly attribute this to the fact that you had Trump out there saying, oh, there's not much to worry about. The US doesn't need to worry about the coronavirus and all these sort of things, but investors are still extremely uneasy. And the fact that one of the biggest nations in the world and their leader isn't taking action on something like this and sort of dismissing the issue itself puts a bit of fear in people's eyes. Over this period of 3 days, the Dow Jones has effectively dropped roughly about 2,000 points. And the thing a lot of investors would be thinking now is, what should I do and what is going to happen? And that really comes down to what is sort of your risk level, what's your strategy at the moment. And for someone who's holding long-term shares, the best thing to do is probably ride this sort of thing out. The economy is likely to recover, and if you look back historically, no matter what happens, the economy does bounce back. The Dow Jones does continue to increase in value. As you guys are probably well aware, dips are a regular thing that occurs in the economic cycle, and more often than not you'll see this occur every 12 to 18 months as sort of a correction on the market. But what people are fearing is, just because the stock market's effectively increased so exponentially, we're due for a significant crash. And that's why investors are probably a bit more panicky at this point in time and are more likely to sell their shares as they don't want to lose their money. At this point in time, the stock market's still effectively in a long-term uptrend, so you don't really need to worry too much about that until you really see a break in that trend, and that's when you're likely to see large drops. But what you've really got to focus on is your own strategy. So if your strategy is to invest in companies that you can see are growing over the long term, or who are stable enough to weather the storm of a stock market crash or the coronavirus or something like that, some large economic event that could impact the world quite significantly, if they can weather that out, or if they're likely to still increase in value in the future. So for instance, you might be investing in someone who's selling the masks that protect you from or help stop the transmission of coronavirus or something like that. They're likely to increase in value regardless of if the economy is going up or down, purely due to the demand and the fear. You've got to capitalize on those sorts of situations to really take advantage of the market in itself. But then if you're sitting with more blue chip type stocks, and they won't be affected relatively too much, and even if they are, the impact should be minimal, then you should probably hold on to your shares. Where you want to be very careful is when you're investing in shares that are extremely risky, in particular when you're looking at your penny stocks. You want to avoid those which don't have the solid fundamentals there, particularly if you're trading, because the fluctuations in value due to what's going on in the macro economy is likely to have quite a significant, severe and unpredictable impact on the share price of those shares. If you want to be getting into the stock market now and you're pretty new to this sort of thing, then investing in something like gold stocks is actually a really good idea to consider, due to the fact that gold is what increases in value when the economy is not too stable, when there's wars going on, when there's epidemics or pandemics occurring around the world. Everyone gets out the stock market, gets out of property, gets out whatever, and they always end up going to gold. So if you invest in gold stocks themselves, in particular gold miners, then you're likely to see an increase in value there. If you don't want to invest in gold itself per se, you can still invest in gold stocks. Now, I'd really like to hear your thoughts. If you have any, please leave them in the comments section below. It's a really interesting time in the world economy and something that a lot of people have been talking about for a long time, and it looks like it could potentially be coming to fruition. I wouldn't call it right now. There's a lot going on, and as a result you might see a bounce in the market, and as I said previously, it hasn't dropped outside the long-term uptrend sort of resistance points, support points, whatever you'd like to call them. And as a result, I wouldn't be calling it now saying the stock market's going to absolutely plummet and crash. Regardless if it does, these things always sort of recover. So leave your comment down below, let me know what you think, and we can have a bit of a chat about it. And with that, guys, I'm wrapping up this video. If you enjoyed it, please remember to leave a like. It helps me out so much, and subscribe for more content. With that, guys, hope you have an awesome day. See you next time.